Welcome to the 2020 Akers Financial Market Review and Outlook for 2021. Our webinar series begins this year, 2021, on this Thursday at 4 p.m. And what happens is this: we want you to enjoy our webinars and learn. We're going to try to bring many topics every few weeks on Thursdays. Once these are done and have been shown live, we then will bring the recording onto our webpage at akersfinancial.com for you to be able to watch it again, or to send that video or the access to the video to another one of your friends. We do thank you for all the referrals and business that you've provided to Akers Financial over the years, and we look forward to serving your family and your friends throughout the years to come. Akers Financial Group has done something very special this time. Kim Haight has put together a gift just for paying attention and watching the webinar. This blanket is so you can stay cozy and warm. This blanket is a gift Kim Haight picked out for us so we can give out to everyone that listens to our webinar. It's one per household, but if there's like a fight that goes on in the family, we don't want that. So if you ask Kim nicely, maybe she can get you two. We'll see as supplies last. So those are blankets. That's this webinar's prize. Hope you'll enjoy that. Hopefully you'll enjoy this webinar. The webinar is designed to provide sort of like a recap of last year. Alex Monk will be coming out and talking about what happened in the markets in 2020 and show you the numbers of the different indexes and how they did. Then right after that will be Bernie McVey talking about 2021 and what's going to be happening, what we're looking forward to, what could happen. We're also going to be understanding that this year is going to have a lot of different change. We have a new president, we have a new Congress. They're going to come out with many different thoughts and different laws, and we need to make sure we're on top of that for our full financial planning to apply it to each and every situation the best we possibly can. For housekeeping on this webinar, we'd love for you to chat with us. On the bottom of the box here, you can just hit chat. Someone's going to be monitoring at all times. Just give us a hello, and then we ask any question that you might have. Akers Financial Group, we have the webinars. It's designed to provide information to you guys instead of having in person. We're open by the middle of this year to be able to start planning to have get-togethers this coming fall. But for now, we're going to have webinars every 2 weeks on Thursdays. So we look forward to having these for you and a lot of great topics planned. We're in a couple of weeks on February, and second Thursday of February, actually, we'll have Daniel Wildermuth and his insights on investing in 2021. But to begin this webinar on the 2020 Market Review and Outlook, we're going to have Alex Monk tell us about the market of 2020.
All right, thanks for the good introduction there, Brian. I'm Alex Monk, and I'm going to jump right into the year we just went through. I know a lot of weird stuff happened, so let's kind of recap and see what the markets did. Let me go ahead and share some slides with you guys. All right, so this is just some disclosures going over who we are. We are stockbrokers, we are registered investment advisors, and we're also insurance agents. So here's all the disclosures, information about our broker-dealer down in Georgia, Kalos Capital and Kalos Management. So first off, we're going to start out with just looking at what happened, different asset classes throughout the market. And then we're going to go over and have some talk about what we think is going to happen going forward and kind of how to deal with that. So the U.S. markets started out good, and then you see we had a real big decline. That's the pandemic or COVID-19 coming out there around March. And we were able to recover and then some. So the Dow finished roughly positive at about 7%. And then you had the S&P 500, similar chart, just a little bit more on the recovery, and it did right around 16. And then you got the NASDAQ, which is made up of a lot of technology, and it had a great run. And you can see the dip was not quite as bad there in March, and the recovery has been historic, to say the least, with some big returns north of 40% for this year. Internationally, similar story. The pandemic hit them a little bit earlier, but their markets correlated more with ours on their decline. And they have not quite recovered as much. The FTSE 100 or Europe's down about 15% last year. The Nikkei, Japan, it had the same decline there in March, and it has a double-digit recovery, doing about 16% for the year 2020. Now, oil's been kind of a weird one. It's been affected through travel. It's been affected through all types of different things this year, lack of demand, and then you have some OPEC stuff and production being stopped, all types of weird stuff for oil. It finished the year down 23%, but has since started to make a recovery, and it's up above 50 now into the new year and has some momentum there. So we'll have to watch and see how that works out. And then we have gold. It had a great year. I dipped a little bit in March, which is odd, and then it kind of took off. And that's your fear trade as the market goes down and you have people worried about currency and they want to be in an asset class that I guess does not deflate in value. So gold had a good year, up double digits, 22%. The Treasury notes, as I'm sure everyone's noticed, the interest rates are down. So interest rates went from almost just under 2% to start the year to finishing the year at just under 1%. So interest rates are at an all-time low, and that's the Fed getting involved, trying to stimulate the economy through cheap money. And then you have the dollar index. So when they print all that money, what that does is it makes the dollar worth a little bit less. So the dollar finished the year down about 7%, but that's been a pretty big trading range for currency, considering the US is the most stable. So that's going to segue into what we talk about next and kind of what we think is going to happen moving forward. So I'm going to go ahead and pass it over to our next speaker, Bernie McVey, and he'll get covered on what we're going to do or what we think is going to happen in the year coming forward.
Welcome to our market outlook. My name's Bernie McVey. I'm an advisor here at Akers Financial, and I would like to share with you my thoughts on the market outlook for 2021. I mean, overall, I think the outlook for the market is positive, despite the valuations that we're seeing, which are really elevated based on lots of factors, which we can talk about. Primary among them is the accommodative Fed and Treasury, which are determined to keep interest rates low in a new Biden administration. And so I think the markets are a bit propelled by this, along with their commitment to long-term lower interest, minimal interest rates. We're also facing some likely stimulus related to not just the COVID situation here worldwide, but also in support of small businesses and individuals based on the pandemic. And we may see at least one round of stimulus kind of going forward, all of which is pretty bullish for stocks. Lurking behind the scenes is the inflation outlook, and we're already beginning to see indications of inflation in certain markets, namely the commodities markets. We're committed here at Akers to having some minimal exposure to commodities for this very type of situation because they tend to spike very quickly in inflationary environments. Additionally, this is very bullish for gold, precious metals, probably oil, and certain non-dollar commodities. I think also, though, that we need to be prepared for potential shocks to the economy. We're living in a period of political chaos and potential social unrest, and there are any number of triggers that could unfold here that might, in the short term, unravel some of the market gains that we're expecting. So I think we need to be prepared for volatility. There are geopolitical factors in play, and also, underlying all of this is a significant amount of debt that we have, not just here in the U.S., but just generally speaking worldwide. There's a there's a tremendous mountain of debt, and we need to be wary that that any kind of like prolonged shock to the economy could start to unravel some of that. What we really recommend for all of our clients is stay diversified. We really don't believe in total exposure to just the stock market. We believe that all of our clients need exposure to, other types of assets, specifically some hard assets, the real estate markets to generate income, precious metals, commodity, and we need to stay committed to international, even though it's underperformed over the last few years. So once again, in summary, we believe the market outlook is positive. We need to be prepared on all fronts for all sorts of political shocks and so on and so forth. But we need to follow the trends, and they're pretty strong. And that's growth stocks, technology, cybersecurity, e-payments, and then the political currency debasement, and the beneficiaries of that are the precious metals and commodities largely. So thanks, and I hope we all have a successful 2021.
Thank you very much. This is Brian Akers. Thank you, Alex. Thanks for Bernie for having your talks. Alex, especially on the review of 2020. Thankfully, that's all behind us. Hindsight is now 2020. 2021 outlook is really going to be depending on many variables that are out there, like Bernie talked about. We're looking forward to the market possibly doing well based on certain things, almost like it has to. We've been seeing interest rates start to move up. But one of our biggest concerns this year is the fact that inflation seems to start moving up recently. And what happens with inflation is that is cost of living. That is something that we need to have Bernie come back and talk more about. So here's Bernie McVey and his talk on inflation.
This is Bernie again, and I thought it might be worth taking a few minutes and talking about inflation specifically, as we mentioned that it's on the horizon in 2021. And so for those of you that are not familiar with it and what its effects can be, we thought maybe we'd talk a little bit about, first of all, what is it and why do we need to be concerned about it? So inflation is the result of a decrease in purchasing power that's really based on many more units or dollars being in the system chasing, a fixed amount of, we'll call them scarce goods, whether they be stocks or real estate holdings or groceries at the grocery store. And so why is this relevant in 2021? Well, we're coming out of a year with a pandemic where many more purchasing units or dollars were released into the system in the form of stimulus. And as they work their way through the system, we're thinking that it's likely that we may see a modest amount or potentially even more than a modest amount of inflation. And so we are bullish on a lot of our asset classes because we expect these dollars to be chasing these scarce assets of all types. And there's a saying that a rising tide lifts all boats, but that's kind of what we're facing here. And why do you need to be concerned about it? Well, if you're a retiree and you're living on a fixed income, what you're going to see is that amount of money that you've coming in every month, every year, basically is able to purchase less because of the number of dollars that are in the system. So we are cognizant of the risk. The Fed has stated that it's very interested in achieving an average inflation and target that goes beyond the 2% they've been striving to achieve. And we think you need to be aware of it and use the asset classes that we are advising in our select portfolios to help us to grow our portfolios in excess of that inflation amount so that we can maintain purchasing power.
Hello, Alex Monk back here with you, and want to spend some time to review the AFG Select portfolios that we have here at Akers Financial. Again, our disclosures: we are stockbrokers, we are registered investment advisors, we are insurance agents. So we want to make sure that We have the proper disclosures everywhere, so no one comes knocking on our door. Just a general overview of AFG Select. What the general idea is, we've teamed up with Brookstone Capital Management, a large RIA or registered investment advisor that brings together all types of different money managers and assets to one platform. And we've teamed up with them to create custom portfolios that we feel fit our mentality as well as the needs for a core holdings for some of our clients. So those 4 portfolios we're going to go over today a little bit, but they're growth and income, moderate aggressive, and the diversifier. And they're all structured differently based on what we're trying to do. The growth and income is exactly what it sounds like. We are looking for long-term capital appreciation and current yield. So when you have current yield or income coming off a portfolio, you give up some of that growth. So we have a combination of some growth, and then we have a lot of income producing assets, looking to grow the money while getting current income. So that way the market growth will help us keep up with inflation. And then the current income will obviously pay the bills today. Our moderate portfolio does not have much current income. The goal there is more moderate growth, some of it through dividends and such, but some of it through pure growth as well. And we have a blend of value and growth. If we remember the review we did earlier of 2020, growth or the NASDAQ has done a lot better, and value or the Dow has not performed quite as well. So having that blend should let us pick up the disparity in those asset classes, as we'll eventually see the shift from value to growth. We've also added a lot more actively managed funds in here during the pandemic, because there's weird places in the market where some stocks are doing very well and some aren't, and we think professional management can really deliver value. And now our moderate aggressive portfolio is geared much more towards growth. It's heavily overweighted towards technology, and we include a lot of the smaller mid-sized names in there, a little bit more aggressive, but they have higher return potentials. All of our moderate aggressive portfolios are all equities. You don't see a lot of bonds in there, and that's because we use fixed or fixed index annuities as our bond replacement. And what that does is it allows you to take more risk with your stock side, because we know that our safe side is protected by guarantees from the insurance company, versus bonds, which still have risk on them, even though they aren't presented that way typically. And then the diversifier portfolio is our last one, and it's not a standalone portfolio. It's there to be used in conjunction with another straight equity or a U.S. stock portfolio, really just to get the asset class exposure that we have in some of the other models, but that we feel that everybody needs. And that's access to metals, commodities, and all different types of asset classes. As we've seen such a strange year, it just shows you why diversification is so important. And this just gives us a report of how we've done. The diversifier's done 7% for 2020. The income model did just over 5%. The moderate did right around 11%. And the moderate aggressive was just a hair over 14%. And those are all net of fee numbers. So we encourage you guys to make sure, if you're not already a client, that you're looking to make sure you're diversified the right way. We're always happy to answer any questions that you have. And that's why we continue to meet with clients, because we feel that we need to make sure our portfolios keep up with all the different things that are changing in the world and people's lives. And that's what we want to do, is we want to be there for people as life changes and make sure that their money's doing what it needs to do to achieve their goals. We appreciate you guys hanging out with us today and spending some time. We wish we could do it in person, but unfortunately, we're not quite there yet, but we hope to see everybody soon.
Hello and welcome back. I'm Brian Akers. Thank you to Alex and Bernie for your talks today. Hopefully you got a lot out of it when it came to reviewing last year, thinking about the outlook for this year, talking about inflation, and also some information about Akers Financial Group select portfolios. At Akers Financial Group, we always lead with full service financial planning. This year, with the tax laws where they are, which tax rates are very low at the moment, as things change throughout this year, we'll need to have a lot of information out. That information will come to you via our radio show on Saturday mornings, Winning in Retirement's on at 11 a.m. on 105.7 The Fan. Information also comes out on Wednesdays on our emails. In those emails, make sure you click and read the basic core part of the email, and then also the newsletter behind it has other information. So those are a couple of ways we get information out. And then there's webinars every few weeks. As laws change, and we'll put together a webinar based on what happens. So with a new president, new Congress, there will be some changes this year, and we got to be ready for that, and we got to plan for it. One of the biggest things to consider in 2021 is, should you convert your Roth IRAs? These Roth conversions can be done anytime during the year, and we're recommending that Roth conversion decision be made in October, November this year, because by that time we should know some of the laws, what direction things are headed, and do we want to pay tax now or in the future. We do believe that tax rates will rise in the future, and we don't want to pay too much tax on the IRA. In 2021, RMDs look like they are returning. So right now, we're taking RMD and doing QCDs, which are qualified charitable distributions for those over 70 and a half. We also have a lot of things that are going to be going on when it comes to planning for anybody that's 72. This would be your first year for a required minimum distribution. When it comes to taxes this year, we do have to announce a new change that we're going to have. My father's company, Akers Tax Service, has been bought out or merged with a new company that my son Noah Akers and myself have, and that's called Daniel Allen. Daniel Allen will be a tax service, a tax preparation service company. It'll be led by Noah, who recently graduated with his M.B.A. He will have people, accountants, working alongside. My father, Danny Akers, has been doing this for over 50 years, will also help part-time basis. But other accountants we'll have is Josh Lindner. He'll continue as a tax preparer for us. And Alex Monk will be doing some more tax preparing for many more clients during this process. Noah Akers, and then some involvement by Caitlin Lookingbill. So Akers Tax Service will actually be changing its name through a merger with Daniel Allen, which is a tax service owned by my son Noah and myself. So you'll get a lot more information over the next few weeks about that as we have some technology changes and digital aspect. Right now, under the current COVID laws and COVID rules, we're doing a quarantine lobby as our main source of tax business, bringing information in that way. And we're also set up websites to do uploads into secure sites, which is going to be one of the better ways to deliver data back and forth to each other. So be on the lookout for that information, and we look forward to having Daniel Allen serve you well throughout this tax season. Now, during the tax season, over the last, 15 years now, my mother also was assisting my father, Margaret Akers. She will be also assisting us as we transition and get to all the procedures down. So we look forward to meeting you during the tax season through Zoom, phone calls, or as you drop things off. We also have the curbside option where you can pull up, call the office, we'll just come out and pick it up for you. The rules with COVID is we just want to be careful for each and every employee and careful for each and every client that we have. So that's why we have to be pretty strict when it comes to any mask-to-mask meetings in the near future. Hopefully things will get better by spring, and then we might be able to open things up quickly at that time. The last thing I want to cover is the fact that on February 11th is our next webinar. We've invited Daniel Wildermuth, the co-founder and CEO of Kalis Capital. He's also the CEO and lead portfolio manager for Wildermuth Endowment Strategies at Wildermuth Advisory. A lot of job titles, but he's a money manager we've used for many, many years. He's going to bring his unique insight into the markets and the outlook in our very next webinar on February the 11th at 4 p.m. Thank you again for listening today, and we look forward to sending you your blanket, your Akers Financial Blanket. You can hopefully have that in your possession by our next webinar. Any questions you have, give us a call at Akers Financial Group. We look forward to working with you, and thank you for your time. Enjoy your day.